What's going on, guys? It's your boy James, the Forex Prince, back at it again with another video. Hey man, listen, if you're new and you're just starting the journey on your path to becoming a successful trader, listen, make sure you like and subscribe to this video because this is going to be a really interesting video, and this is the video that's going to get you started on your path. So stay tuned. Thank you. Before we get into the video, just wanted to give you some motivation. Alright, trading tip 295. You miss 100% of the trades you don't take. When your plan is presented, smash the trade no matter how uncertain and anxious you feel. Keep striking and profits will follow. Build through your execution. Make sure you put that on, and then that will build onto muscle memory, people. Make sure you smash on them trades. Alright, so let's get right into the video. Alright, here we are. Euro USD on the 4-hour chart. Alright, I just wanted to go over a few reasons, a few points, a few things that you can trade, and easiest, most foremost ways we just gonna get it out the way is indicator trading. Alright, so my screen, my chart, my setup, awesome, right? Cool. Definitely check that out, description below. But while we're here, make sure you check out a few things. I utilize a few simple, very simple strategies, all right? But they're combined and they're here and they strike at the same time, all right? So the striking at the same time for me is one of my ways that I trade, all right? I call it probability trading. What I do is the more confluences I have, at a certain time, like let's say they all fire at one time, that's a probability number. Or one fire a few minutes later, that's a probability number. So I'm not gonna go over the different probability numbers, but just basically what I'm meaning is the more confluences I have, the more that I trust my trade, or at least trust to jump into it, you know. So first things first is, if you look on here at the 4-hour, right? Any one of these days, if we drop down to just the specific day, it would have shown it bounced off of its high or it bounced off of its low. That's part of supply and demand. So what you want to do is you want to go ahead and you want to mark your chart. So Monday was the 22nd. We wouldn't have had none of this on the screen. We would have been coming off of this. This would have been our chart. So what we would have done is we would have came down here to about most recent area. So this was probably Sunday, Thursday, Friday, and that's Sunday. So Sunday is that green candle there. Let's zoom in, and we would have marked it like this, right? Actually, I would have came to the daily. Tell you why. Heartbeat. I would have came to the daily, because I would have looked at smaller time frame like this. So let's bring the chart up. We got a Tuesday here, a Monday, 22nd, and we got a Friday. All right. So what I would have done, just in this general zone, if you look, I'm gonna zoom. We're not anywhere. Let me get a pencil, a brush. All right, so we're not anywhere. If you look, this is the zone. All right, that's the zone. You want to go ahead and you want to just watch that. That's your zone, because it's not this, it's this. Price is in this area. So that's your zone. So we would draw a line from here and a line from here. All right, it goes above this line. We're going to buy. Ooh, that's horrible. We're going to buy. It goes below this line. We're going to sell. That's what we would have done, right? Cool. Supply and demand. You would have also biased your decision off of where everything is. So you got to buy and sell there. So down here you would have seen that price was under the range line on the RSI. Also, we had a red trending going here, so that lets you know that it was just trending. As well as you can see price threw a sell signal here and just fell. So now we're just hovering in this area. What was price going to do? It was about right here, right? Friday the 19th. What's that? That's Monday. Friday the 19th, price was here. It bounced around. It might have bounced off that zone a little bit, went through it. So Monday would have been a sell, right? Tuesday, red candle. You would have held. It came in this zone. It looked like it bounced, tried to go back up. It held here. It broke. You would have placed your entries here, your points. Price would have came down. So let's get these lines out of here, right? Boom, boom, boom. I'm just gonna get rid of all this. So I'm showing you supply and demand first in a way of indicator trading because I want you to get the next point. So I've already shown you two ways to trade: confluence trading and now supply and demand. I'm about to go into the next points, all right, which is called reversal or retracement trading, right? So I just said that that's supply, that's demand. Price either bounces off demand or bounces off supply. So at this level, it's about 75.38. Price broke through. We're going to take the pin off. Price broke through. And it went down to a mere 7,100. That's about 200 pips. It fell. Just off of that. Now, what you could have done if we bounce back off of this point here, right? Reversal trading. If price touches this line, but don't fail to break above it, we enter for a sell. If price touches this line, but fail to break and close, we enter for the buy. That's reversal. So price came, it touched this line down here. If it couldn't break 200, so we would have reverse traded on the up. All right, we would have known to do that because it didn't break. So we didn't continue with trend trading, which is this, which is supply and demand. Supply and demand is part of trend trading. We didn't continue. All right, so we read a reversal. We got it up. It couldn't break this point. What do you mean? Reverse. Boom. You would have called all of this, and then you would have entered in your second position here. Boom. 2 positions down. But you would have caught the rest of this little 200 pips, and you would have caught that down. It's easy, easy money. Now, that's the third way to trade. I'm going to go over this on MetaTrader so you can see it in a different way, because that's where we all trade. None of us trade on TradingView, so I'm going to go over to MetaTrader and show you how that works. But let's go over Wave 4. And Wave 4 is a little bit different. It's not created by me, but I adjusted it to make it work for me. And what it basically is, it's like this, right? It's just candlesticks. It's short shot candlesticks. Let's go to MetaTrader. All right, now that we're over here at MetaTrader, right? This red line here. This red line. Where is it? This red line here. Tell you. That's the one. And then this green line here. That's the one. Let's go back a few weeks, right? Price broke this line. You could have traded up. Caught those easy pips. And held until it either broke the green or tried to test this line again, right? Now, if I take all these candles and everything, I mean, if I take everything, the indicators and everything off the screen, which I'll give you a glimpse. All right, you can see that it's just price in the 200, right? Let me get that off the screen. Actually, we'll keep it because we'll use it. So price is the 200. Everything down here is everything down here. See what happened? Buy. What happened? Sell. What happened? Buy. If not here. What happened? Sell. Alright, so you get what I'm saying here. You get what I'm saying. Up here, we got a trend, and we got a lot of this noise. Trend, and a lot of this noise before we got an actual trend and signal. Trend. A lot of noise. Where is price hovering right now? Down channel. But it's on the upper channel on the Bollinger Band. So that means it closed above both points. Good uptrend. I'm just going to spin a block. Boom. See? If you learn the Wyckoff, that's the method of number 4. The 4th number way to trade is called the Wyckoff method. And you use this method to understand what happens or what phase price is currently in. It could be in a supply or demand phase, which is the same as an accumulation and a distribution period. Alright? Accumulation means they're accumulating orders to go on a buying trend. A distribution period means they're gathering sales to go ahead and try to lower price so people can then sell. Alright? They're trying to create reasons for people to sell. That's what it is. So we're just going to try to identify that in the market here. See how it's all black? I'm just going to leave it there. Look. Boom. Distribution. No, this is accumulation. Accumulated orders to go on the buy trade. Then if we black out here, they broke out of the Bollinger Band. Distribution created sales to go on the sell. Here, this period was about the same thing. A distribution period. Because if you look at it, they tried to break here. It wouldn't. Boom. Straight down. And that's what price been doing over there. Look. Distribution period. Accumulation period. Broke. Couldn't do it. I got my Bollinger Band spread out a little bit more. So technically, if it wouldn't have been that one, that would have been out. That's in. Boom. Started getting orders. Broke out the top Bollinger Band. Boom. It started setting people up. The 4th way. Like I said, you got... Here's the 4 ways. You got indicator. This is buying territory. Selling territory. Then you got reversal. So it's like this is, let me see, this would be demand, this would be supply. If price couldn't break above demand, then we know to sell. If price couldn't break supply, then we know to buy, right? So, and then the reversal period is you will go slightly above supply and demand, so above and below, and if price can't touch it, then that lets us know to follow down. Same. See? Couldn't touch, go up. And then 4th way is understanding the Wyckoff method. So you could then understand what price is doing. It's accumulating. It's doing what it's due. You can even see it down here on the indicators. Oh, it ganked out. Alright. Look here on the indicators. I'm trying to zoom. Okay. Boom. Boom. Is that not in the wait for buy area? Boom. Up here, wait for a sell. It was gathering orders here. Went out of the zone. You see it on the Bollinger Band. Went out the zone. Then it shot back in. Went out the zone. Waiting. And it bought. Come on, man. Alright, so like I said, I showed you the 4 ways. I didn't want to keep you too long in this video. So let me go on to our speech. Get us out of here. Alright, thank you for watching the video, and if you've made it to this point, I just want to say that I appreciate you and I am thankful for you, because it's people like you that actually make me feel like what I'm doing actually is worth it. Alright, so let's get into it. Every trader must take these steps. Alright, I mean, you must take these steps. You gotta stop caring about money. Money is a drug. Money is nothing more than an addiction to keep us in the matrix. And if you know what the matrix is, you don't want to be here no longer. Alright? Step 2. Start to see trading as this routine and process, and not just to get something you want, you know? It's something you do, and you know that you have to stick to the rules in order for you to get better at, to do it well, you know? Step 3 is to practice removing yourself from emotion, all right? Meditate daily if you got to. Learn breathing techniques if you really have to, or operate out of gratitude. Listen, you have to get yourself as far as away from emotion when you're trading as you can, because that's going to have you blow up your accounts. And then step 4, you want to make sure you develop a very thorough system for how you would trade. All right, so stick to it religiously, and I say that and I mean that, because your strategy is going to be your Bible in this game. And if you don't stick by your Bible, you know what happens. All right, so make sure you develop your mindset as well, because a lot of people, they have all the tools, but then they don't have the mindset and they can't follow through. So make sure your plan and your strategy includes some stuff for the mind, man. Like every day I listen to some meditated tomes, and I just sit there. I don't gotta do nothing extra for me, but that does wonders, like a pep talk. All right, so let's get into it. Step 5, you'll start to realize that you have a lot of things that you don't care about, like money. Money won't be a big issue anymore. When you take these big steps and you actually put money to the side and you stop worrying about it, you'll actually start to live your life. Living is about the journey, not the achievements or the milestones you've crossed. It's just the fact that you woke up. So if you woke up today and you managed to watch this video, make sure you like and subscribe. Make sure you tell me down in the comments section why you want to trade, why you trade. And yeah, man, stay blessed, stay honored, stay highly favored. And remember that I love all of y'all, and I am highly appreciative for all the support that y'all give, because y'all definitely show your boy the love. And I hope I show my love to y'all by making these videos. So, for better or worse, you guys, stay blessed.